Let's get you some of the markets commentary of the day that we're also tracking here. Billionaire hedge fund manager Bill Ackman said in a post on X, formerly Twitter, that he remains short on bonds and sees long-term rates rising further here. Now, Ackman notes that energy prices are rising rapidly, saying that not refilling the SPR was misguided and dangerous. He also cites the rising national debt, wage gains, and continued economic growth, keeping inflation above the Fed's 2% target long-term. Writing, quote, "The long-term inflation rate plus the real rate of interest suggests that 5.5% is an appropriate yield for 30-year treasuries here." He also said that there are just too many, well, at least he was greeted by one of the chief investment officers for a large fixed income asset management firm, and had recently asked them just how it was going. Also talking about each debt ceiling being an opportunity for their divided government and its most extreme actors to get media attention, and for our nation to threaten default here. Something that we were discussing with one of our guests earlier about whether that is fully priced in to the markets at this point.
Yeah, certainly one of the risks here that does present itself for the markets over the next week or so, or potentially several weeks as we look ahead to what exactly is coming next. But he also went on to say that 2% inflation target, and we've talked to so many guests about this, whether or not that should be the target for the Fed at this point, given the current dynamics. And he goes that the long-term inflation rate is not going back to 2%, no matter how many times Chair Powell reiterates that it is his target. He also discusses the labor market, the ongoing strikes, how that could potentially play into inflationary pressures here going forward, and the fact that workers do still seem to have the upper hand, at least at this point of the economic cycle, although there are obviously some signs that maybe that is beginning to turn. But the long-term deflationary effects of outsourcing production in China, no more workers and unions bargaining power continues to rise. So with all that said, that's his projection. Not too far off, really. I mean, it is more on obviously the higher side when it comes to the longer term rates, but Chair Powell did say that we got to be ready for this higher for longer environment as they do continue to try to get inflation under control.